You could shop 700 conventional lenders, and not one of them can do a duplex loan for under 25% if it's not owner occupied, right?
Yeah.
There is a loan for that. It's just not a conventional loan, right? So
Yeah.
you kind of have to sort that out a little bit and go, what am I fighting here? Right. And so I would agree with you, but a lot of times what it is people are actually asking for the wrong thing, right? They're asking for the hammer when they need the screwdriver. So a lot of it is that too. It's not just looking for the right lender, it's looking for the right product. And a lot of lenders just don't offer that product. They don't have the creative solutions. So they don't even know it exists, right?
Yeah.
So it's a
Yeah.
combination of the two.
Welcome, everybody, to the Creative Cash Flow Show. I'm your host, Jesse Mills, where I bring you real estate secrets for achieving time and money freedom every week. And, ladies and gentlemen, I am so pumped to have a good friend and one of the top guys you need to know in the mortgage business, Tim Swierczek, on the show today. Tim, thanks for joining me, buddy.
Yeah, Jesse, I'm excited to talk about these myths. People
Dude.
don't know a lot about funding and they hear from their grandparents and their parents all these very outdated ideas. So I'm happy to talk to you about that today. And, let's get to
Mortgage
it.
myths
Right?
and mortgage misunderstandings, right?
Yeah.
Mortgage misinformation. Let's say the buzzwords misinformation, right? It's fake news, fake news. There's a lot of stuff out there, guys, that people hear from other people that are wrong, they're incorrect, or they just don't know any better, or they're talking to the wrong people. And if you've been a fan of the show at all, or you just started listening or just started watching, guys, you know that I'm a big believer on surrounding yourself with an amazing network, right? Your net worth is your network. It's a cheesy saying you hear a lot, but honestly, guys, it's true, right? Tim, would you agree with that?
Absolutely. Yeah, for sure.
Yeah, right. I mean, you got to just have A players that you're surrounding yourself with, and you're always just growing. But the thing is, there's no right or wrong answer a lot of the time in real estate and in finance. And so you want to make sure if you're not getting the answer you want to hear, guys, you go find someone else. Okay. And so Tim has built an amazing business and career on being that guy and being the one that says, wait a minute, we can get it done, or yes, we can, or this is how we do that, or maybe we can't do it this way. Right. And providing options and solutions. And my one of my company's Home Solutions Group, that's in our name, is solutions, right? We're always providing solutions to people. So,
Yeah.
I wanted to have Tim on the show really bad, and we're having dinner the night and talking about just some different situations and clients, um, and Tim's a big investor as well. So super cool that he is not just talking the talk but walking the walk as well. And so yeah, man, I want to pick your brain, dude, and I want you to kind of drop some gold on our audience with things that you hear from people that they think they can't do. And I've got some things I can suggest too. And it's just some of the kind of cool creative stuff you're doing because you've got a unique business, and you and your wife work together, which is super cool. And I love the way you guys set this up. So I'm gonna let you tell a little bit more about your story, how you got in the business, and honestly, feel free to just gloat a little bit, dude, because this is your chance. Most I know you're not that kind of guy, but you've built a really good business, dude. So how'd you get
Thanks, man.
started? Yeah,
Thanks.
absolutely, dude.
Yeah, so the quick version so that we don't bore people is that my wife and I got into the mortgage business because I wanted to be a real estate investor. Okay, so
Awesome.
I got in the
That's awesome.
mortgage business in September of 2002,
Okay.
and I purchased my first rental property in December of '03. Right? So there is a little bit of a gap there, but I can tell you there was a learning curve. I
Not much,
wanted to
man.
be an investor, but I
Yeah.
didn't know how. We didn't
Yeah.
have bigger pockets, and I'm sure there were plenty of investment books, right at the time, but I didn't read any of them, right? I literally was learning from my clients and from the industry itself and stuff like that. So I did a burr before the word, before the phrase was what came up, right? So
Yeah.
that was my intro
That's
into the
awesome.
investing. And over the time, our first project was creative, and I've been creative focused ever since. Frankly, for my own personal investing, I've only had one property that I've ever had a residential mortgage on, or a conventional mortgage. So most of your clients probably think conventional first, and if they've been listening to you for a while, they might have changed. But the
Hmm.
reality is, that conventional loans are not the best product, right? For this, and in a good way, I like to put this to clients, is, as an analogy, if you went to an auto mechanic shop and and it was the cheapest price product, you would be driving up onto ramps and they'd be crawling under your car to change your oil. But you don't. You drive in and a lift pulls you up. Those ramps are like 250 bucks. The lift is like 100 grand, right? Why do
Right.
they use the lift? Because it's a better product, and there are better products out there for investors than conventional loans.
Nice, dude. I like that. Never thought about it that way. I like
Mhm.
analogies, though. That's a good way to do it. So,
Yeah.
okay, this brings up a good point. So, if you're a real estate investor, either now or you want to become one, you're saying that the conventional loans, the cookie cutter stuff that your brother, your cousin, your friend from school can do. What everyone knows somebody that does a lot of that, right?
Yeah.
Um, and if you don't, hey, we obviously have amazing resources. But what if you're doing your own home? If you're living in your own home that you're going to be in for 5, 10, 20, 30 years, then is that probably a good route, you think, still?
Then I'd say it's the only route. Yeah, I
Yeah,
mean, it's just they're two different products. Again,
exactly.
it'd be it's you want the right tool for the right job, right? You don't use a hammer on a screw, and you
Right.
shouldn't use a screwdriver on a nail.
Well,
They're
I
two
do
different
sometimes,
situations.
which is why I don't fix things in our flips. I find them, I buy them, I sell them, and my partners do everything in the middle because I do that stuff. Yeah,
I hear you.
exactly. Yeah, man. No,
I
totally,
hear you.
totally.
But yeah, realistically, I think that we should have mortgage misinformation part one, two, and maybe even three, because there's
Yeah.
a lot of stuff out there. Today, I want to focus on some of the more creative financing things, but I think there's some other topics, some other myths that we could get into that will really free people up. But it's it would become too long of a podcast for the day.
Touche, touche. It would, yeah, yeah, and we can kind of compartmentalize it too, right? Like for investors, experienced investors, or those I got a couple deals under their belt and have been through financing a little bit, and then
Yeah,
regular homeowners and whatnot. So,
yeah.
um, yeah, so okay, I love it. I love it. Yeah, this definitely could be a two or three parter. Maybe you don't know off the top of your head, but what's a couple of the things that you get a lot as a loan officer where you're like, oh, dude, that's so wrong. This is the right way.
Yeah, I mean, for your audience, I think there's a few things that are pretty important. You could put them in any order you want, but I think one of the big ones, if I'm taking an overarching thing, it affects loans, but it affects every part of their thing, is they try to do it all, right? And that's not necessarily loan related, but it leads to loan decisions or them limiting themselves. So for example, you mentioned your partners, right?
Hmm.
You have an expertise, you have a skill you're really good at, right? A superpower, right?
Yeah. Yep.
So do I, right? But
Hmm.
I'm also not very good at. I don't want to screw a screw. I don't want to fix a toilet. I don't want to bang a hammer, right?
Hmm. Hmm.
Not only am I not good at it, I don't enjoy it. Everything else, there's plenty of things I'm not good at, but there's plenty of things I am. And so I
Hmm.
think what a lot of my clients do more than anything, as a first time home buyer, fine, go do whatever you want, right? Fix your own toilets. But if you really want to scale your investing career, you have to learn how to work with other people. So in the finance world, that might be other people's money, right? So
Hmm.
there's a whole line of products out there where you can legally, and I'm talking about not underhanded, not shady stuff,
Yeah.
but literally I could go to you, Jesse. I could get either you as a partner or borrow the money from you or whatever, right? I mean, basically those are the two major routes, right? But I
Hmm.
could go get the money from some other source.
Hmm.
I could go to a bank and I could use that as my down payment, and the bank wouldn't have a fit. In fact, they would be completely okay with it, even if I told them that's what I was doing. Yes, I just took a loan from Jesse Mills for 10% for my down payment. Here's my payment. Can I get a loan? They would look at it. Do you qualify? Yes, you do. Go ahead. Those are the type of loans that my wife does. Actually, one of the ways we I'm a problem solver. That's one of my good. I like to think creatively and I like to solve problems.
That's one
And
of
one of
your
the problems I
superpowers.
had is, yeah, I,
Yeah.
I do residential loans for the record. So even though I'm going to trash them through this whole thing, this
You
whole
do them.
episode, yeah, they have a purpose, right?
They do.
They're the hammer, they're the nail for the hammer, or the
When
hammer for
needed.
the nail, right?
Yeah.
But the screw. The screw side of things, that's my wife. She's
Mhm.
the Phillips head screwdriver.
Mhm.
She does the things that are not conventional. And frankly, so we set her up to do those loans. But we've purchased multiple properties with no money down. So someone who thinks they need to get into an investment property and they have to put 20-25% down, well, guess what? The loan does require that. I'm not, I don't want to mislead anyone. Yes, you need to have 20 to 25% down. It doesn't have to be your money. It could be Jesse Mills's money.
I got money for everybody. Let's go. Let's go. We're just lending it out.
Yeah. Or
Sweet.
it could be your aunt or uncle's, right? But the fact of the matter is, if
Correct.
you have the skills and the knowledge, it doesn't have to be you, right?
Yeah, I love
Now,
that, dude. I love that.
the cautious side of me says this: if it's your first investment property and you don't know anything, please don't borrow your aunt's money. Please make it be your money on the first one. That's why
Yeah.
I do recommend people house hack. I'm a big fan of them going off and getting one property on their own and learning how to be a landlord and stuff like that before they end up, doing something else. But I know your business, so I'll tell you here for a second. They have infrastructure where they could use you as
Mhm.
the expert, right?
Mhm.
To do that. But the reality is, I don't think they should go off on their own without expertise, without a team, and try to go, use their aunt's money for a 25% down payment on a house and they've never been a landlord before. I think that's a disaster waiting to happen. But if you can do
Agreed.
that and get into one of your deals or you already know what you're doing, then there's a whole line of products out there through the commercial loan series that my wife offers, portfolio type loans that will allow that, and you don't have to hide or anything to get those. Meaning that you don't have to like hide things from the lender to get them. You
Yeah,
can just
yeah.
do it.
Yeah, you can do it the right way. You can be honest about it, and you can be
Yes.
above board. Everybody knows what's happening, right?
Yep.
Because obviously we don't suggest anyone operate that way at all. But
I yeah.
there's people that are a little, well, they don't have to know that, or maybe we time it right, we get away from this. You know what I mean? There's the gray. But what you're saying is you can literally say, hey, this is I got 50K from Jesse Mills. This is a loan from him. So it's not like Jesse is my cousin and we're a blood relative, right?
Right.
That like Fannie and Freddie are going to say you have to have, right?
Right.
You're
Yep.
saying you say you can totally get away from them, like, and it's
Yeah.
okay. Yeah.
Well, and here, this isn't really a myth, but most people might not know this
Now is that
because
that's like partnership in an LLC, or is that literally like I did a loan with you and we have a promissory note?
it could be either. I've done it both ways.
Okay.
Yeah. You
Okay.
can close it either way,
Okay.
just as long as it's really about disclosing it properly and it qualifies, right? So if I got a loan from you
Mm-hmm.
and my payment was $1,000 a month, and that caused my, they call it debt service coverage ratio, but if we'll just call it DTI for the second, if
Mm-hmm.
that caused my DTI to not qualify me, then
Mm-hmm.
that would be a problem. But if
Gotcha.
they said, Tim, you can get a loan from Jesse, provided it doesn't exceed $700 a month. Well, then if I can find a loan for you that works, that doesn't exceed 700 a month, boom, right? So maybe the loan becomes interest only all of a sudden or whatever, right? I
Yeah.
mean, there are parameters where they would
50-year
say
term and there's
no.
a balloon and whatever. Like I don't
Yeah.
care. Yeah.
Yeah,
Yeah.
exactly. But some things your clients might not know or your listeners might not know
Mm-hmm.
is that so gifts are possible on owner occupied homes. So you go buy a house hack or whatever, you can get a gift, Fannie Freddie, but you cannot get a gift on an investment property conventional. It's actually disallowed funds.
Mm-hmm.
So another reason why these products are so great, and they allow LLCs. They allow for rehab funds built into the loan. I mean, it's the Swiss Army knife compared to, again, the pocket knife, right? I mean, it's better. I guess the Swiss Army knife is a pocket knife, but it's the right tool for the right
Yeah, and
job.
it's a toothpick and a magnifying glass and a hacksaw
Yeah.
and right, it's all these
Right.
things.
Yep.
Tweezers. I mean, it's all of it. Yeah.
Absolutely. Yeah. So that would be one. Just Benny, generally trying to do everything yourself, which causes you to do things like save up for down payments that take you 4 years when you could go talk to four people and get your down payment instead right now. That would be one example. Another example
That's
is,
huge. That's like,
yeah,
I mean, I know a lot of hacks, but I didn't think that was happening where it could be like it's a gift, but it's not a, I mean, it's not a gift, it's a loan.
no, it's a
But
loan.
usually
Yeah.
gifts are loans. They just call them gifts, right?
Yeah,
And
no, you can actually say it's a loan and everything else, and yeah,
and
and
just show the paperwork and make sure it doesn't screw up your DTI, your debt to income ratio, or your
yep,
debt service coverage ratio. So if all of a sudden you were pre-approved for a 500,000 with your total debts that you have, and your income, and then all of a sudden now you have another $300 a month payment, and that puts you over that limit. Well, now you got the money, but you kind of just screwed yourself with the debt to income ratio, unless
Yeah.
you change your terms. And if you change your terms, now you're fine again, right? So you just got to make sure your terms are good to where they need to be.
Or in your example, maybe that just means your purchase price goes down
Sure, a
the
little bit.
appropriate amount, right?
Yeah.
So instead of a $400,000 investment for your first one, maybe it's 300,000 or whatever the appropriate reduction is, right? But
Hmm.
there, so it doesn't mean you don't get qualified, it just means you qualify for something different, right? And
Yeah. Yep. Yep. I've got actually a question for you. So I was having a conversation today with a new investor that was referred to me, and they were asking me, and again, I think I know my answer, but I want to hear yours, not to throw you on the spot, but I want to hear what you have to say about this. And again, this is why guys and gals, his answer might not be what I think it's going to be because he has different people. He has different tools. He has more tools than the average person who's doing this. And so that's again why it comes back to always be seeking what you need, seeking what you want, and making sure you have a really good network and you have the right people. And if you don't think you have the right people, it's not always a no. It just means you don't have the right people. Okay. So I was
Mhm.
talking with this guy today, and we have a really good opportunity for him. It's a slow flip opportunity, and this guy wants to take advantage of this slow flip opportunity that we have for him. But his wife is like, well, that sounds like a great win. We should take advantage of this deal, but we really want to get a vacation rental. And we want to get a vacation rental in the next few months. And we don't want this new deal, which again is an awesome opportunity, to screw up us getting a vacation rental. So how does that get looked at? Now, I said in my 15 years of doing this, in my opinion, right? As long as it's cash flowing or even 75% of it is covered, you're really kind of at a break even point, right? Let's say it's cash flowing, but then the lender's going to say, well, we can't count dollar for dollar all of your cash flow. So we're going to
Yeah.
count 75% of that. And so if that's a wash, it didn't hurt you, it didn't help you. You're just still right kind of where you're at. Is that your opinion?
Yeah. So in other words, I'm going to just to kind of make it clear for the audience, I agree with you, but like, let's just use simpler math. Let's just say
Mhm.
the total payment was $75, right? I know that's ridiculous, but it
Yeah.
makes the math easy.
Yeah.
And let's say the rent was $100.
Okay.
Okay. If the rent is $100, lenders can only use 75% of that rent for your qualification on the next loan.
Hmm.
Okay. So then they would use $75 for rent instead of 100, right?
Hmm.
But your mortgage payment's $75. So what you're saying is they equal each other and it didn't hurt you nor did it help you, right? It's just neutral, right? And I
Correct.
would agree with that.
Yeah.
With the one exception from a lender's point of view is you just put some money down on your bank account possibly, and there could be a repercussion there. So you got to look at that too. But assuming there's enough money for the
Like
down
do you
payment
have
on the
enough
new
funds
place.
for the next place?
Yeah, exactly.
Yeah.
And assuming that all works out, so in the end, no good loan officer would leave this conversation without saying check with the loan officer. But
Exactly.
assuming those things work out, yes, I would agree with you. That in and of itself would be just fine.
Okay.
Of course, if the rent was more than $100, then your 75% would be more than the mortgage payment. It would actually help you on the qualifications on the next one. So that is possible as well if you really got a screaming deal.
Hmm.
So that would be one way to do it.
Okay.
There is a gray area where I can tell you that I could argue both sides of it,
Hmm.
because I've read the guidelines and I disagree with some underwriters on this. But the fact of the matter is, the guidelines do not prevent or allow this specifically, but most lenders take a word out of the guidelines and allow it, and that is this: if you got a commercial loan on a property like a portfolio loan, it is possible they won't count that debt to income against you because it's not on your credit report if you did it in an LLC. Now,
Hmm.
for the record, if you read the guidelines don't say if you buy it in an LLC on a commercial loan, we don't have to count the debt against you. The
Yeah.
guidelines say specifically, very importantly, that it has to either be a corporation buying it or it has to be a commercial property, right? So if you buy a duplex using a commercial loan, that's not a commercial property. But I've seen a lot of underwriters who won't count that debt against you. And so in that case, it wouldn't count against you at all. If it's not on your credit report and it's in an LLC. The reality is, again, if you read real close, that is not the guideline. So that's a very big disclaimer there.
That is tricky enough to be tricky.
It is.
Which
It
is
is.
why you do what you do. Yeah, no, so that's a thing. And now if Tim, if that person came to you and said, "Hey man, this is what I want to do. Can you help me out?" You're like, "Yeah, yeah, absolutely. It could go this way or this way." If you went to one bank and they said, "We're going to count that," and let's say that rent was not $100. Let's say the rent was 75 and the payment's 75. So now you're counting
Yeah.
75% of 75. So now
Yeah.
you're down to whatever that math is, right? It's not 50, but it's below.
Yeah.
So you're losing money technically, and it's hurting you from qualifying, right? So let's say you're
Yeah.
going to do that. At that point, you might have kind of shot yourself in the foot, possibly with that lender, right?
Yeah, or I mean, you could actually follow the guideline and just put it in a C corp, but it'll cost you a little bit more money. But if it's in a C corp,
Mm-hmm.
and it's on a commercial loan, then it's absolutely the guidelines say you don't have to count it. So, I mean, there are ways you can do it, right?
Yeah,
It's just
yeah.
it's understanding the rules,
Well, and
right?
what I was guessing at is if that one didn't work for that particular person, you could go somewhere else. Whereas if it's like I'm going to only Bank of America and Bank of America says no, that's kind of your answer. Or if I'm
Yeah,
just going
sure.
to Chase or to Wells Fargo, or I'm not picking on any particular bank, right? But when they say no, it's kind of no. Whereas you could say, oh, well, this place said no, but let's try this place because you have multiple options and outlets, right?
I would agree. So here's what I will say though. There is a level of looking at is the if is what I'm fighting a Fannie or Freddie thing, or is it a
Mhm.
lender thing, right? Because I
Mhm.
have a lot of
Exactly.
people, they hear the whole Colonel Sanders story, shopped, 700 banks or whatever, and finally got his loan for KFC,
Yeah.
right?
Yeah.
Yes, that happened, but guess what? You could shop 700 conventional lenders, and not one of them can do a duplex loan for under 25% if it's not owner occupied, right?
Yeah.
There is a loan for that. It's just not a conventional loan, right? So
Yeah.
you kind of have to sort that out a little bit and go, what am I fighting here? Right. And so I would agree with you, but a lot of times what it is people are actually asking for the wrong thing, right? They're asking for the hammer when they need the screwdriver. So a lot of it is that too. It's not just looking for the right lender, it's looking for the right product. And a lot of lenders just don't offer that product. They don't have the creative solutions. So they don't even know it exists, right?
Yeah.
So it's a
Yeah.
combination of the two.
That's awesome, man. That's awesome. Well, and again, I think this is why it's so important that when you're talking with your team, whoever your team is, right? If it's your loan officer, if it's your realtor, if it's your partner, if it's your mentor, your coach, right? Everyone should have a coach, have a mentor. But what is your goals and what is the direction you're going, right? Because you might say, oh, well, if you would have just told me you wanted to do this and this and this, I could have told you the right path to go there, right? Like I can help you see through the trees. You know what I mean? But they
Yes.
might be trying to get some specific thing done and you're saying, oh well, I wouldn't go that way, I wouldn't go that path, right?
Yes, absolutely.
Well, I want to take this whole little example we have because this is a real life, like literally a phone call I had today, pacing in my living room this afternoon talking with my
Yeah.
friend about the scenario. So let's take it a one step further and let's get in the weeds a little bit. Okay, let's say this property that he bought as an investment property, right, through me, that I've got this awesome deal on a silver platter. You just have to say yes or no. Let's say he says yes, but let's say he's not actually getting a rental property. He's getting a property that he is buying and then immediately selling on an installment sale, aka contract for deed or a land contract. Now it's not a rental property with a lease agreement. It is a contract for deed sale or land contract
Right.
sale. Would that change it? Because now are you looking at a lease agreement that you can show what that cash flow is, or are you going off of different rules and guidelines like Fannie and Freddie, right, where it's maybe 12 months of note income?
I think that you would be looking at I think you'd be looking at nearly every lender concerning that lease type income, right? I because it's not actually a note in the same way a like an owner finance note is.
Hmm.
And so I think most lenders would interpret that as a lease type income at that point.
Okay.
And because you don't have the history of the note income, and I feel like that's the way that would go with most lenders,
So you would
right?
you would argue it that way, whereas it's just like a lease. Here's their payment, here's your payment, here's the cash flow, here's the debt service coverage ratio, versus well, it's not a lease, and you sold it. Therefore, because you sold it, you can't do anything for 12 months, and now you're on this like little black hole. I haven't
Yeah.
had that happen, but I'll be honest, man, I've been worried about that with certain lenders, where it's like, well, just because we chose this specific tool, now all of a sudden we screwed ourselves for the next deal because you can't count
Yeah.
any cash flow for a year. So you don't think that would be the case?
I
I
don't
can
like
hold you to it, but
I don't want to blow any smoke up your butt. I
yeah.
haven't run into it either where it was that recent, right? Where we had
Hmm.
something that was that recent. I've done one where someone sold one on a contract for deed, but was like, oh, we sold it 4 years ago. It's on a contract for deed, and so it was treated again. We actually treated it like a lease.
Hmm.
Um, and so without like doing a bunch of research, that would be that's my gut, right? But that is
Hmm.
not my definitive. This is the only option, but that
Hmm.
is my 9 times out of 10, or without some really, without some more details and phone calls, that's what I would say.
Okay. Okay. No, that's awesome. Well, and again, here's the cool thing, right? So I know you're like me. You want to have the answer all the time. And if you're like,
Yeah,
I'm not sure, you're on it, right? You're going to find out.
yeah,
So I know that you'll probably be sending that message out, tonight or by tomorrow morning to say, what if this happened, right? To your scenario people and your, scenario desk and underwriters,
yeah,
and, hopefully get some answers because that again is if that's a, hey, no problem. This is the way we count it. That just opens the door for a lot more business, knowing that, which I know is probably like a niche of a niche of a niche, but you and I operate in those worlds, right?
yeah.
So that'd be something that'd be super cool to know that you can do. So, okay. So how about this? Another example. I think I know the answer to this one. I do know the answer, but I want to hear from your side, your perspective. So let's say we've got, again, this is new for a lot of people. They think I've got to have the 20 to 25% down. It's got to be in my bank. I have to have experience in as an investor, right? Which of course, if no one gives you a loan or you don't have, two, three, 500, a million in cash, how do you get the property to get the experience, right? So they think, well, I'm kind of in this pattern. I'm stuck. I'm in a holding pattern because I don't have the money all myself, or I don't have the experience all myself. But could you say, well, I'm really good swinging a hammer, which is not me,
Yeah.
right? Or you, but could that person who's like, I'm really good swinging the hammer, talk to their friend who's got a really good job and just super busy at work and says, I don't want to have anything to do with this property, but I've got my money just sitting there, not making anything or losing money in the market, frankly. And then maybe
Mhm.
talk to another person that says, I would love to get my money moving for me too. And the three of those people do a brand new LLC. And that brand new LLC puts down the cumulative 20% or
Yeah.
25 if it's maybe a multi-unit. And that's their brand new first thing they've ever done. And they go qualify to get financing. Could they do that?
Well, sure. That's exactly what my first myth was all about. Yeah, absolutely. That's exactly what I was saying, is that
Yeah.
you can bring more than one person, and most people try to do it all themselves. And it
Well, it's
leads
a
to
little bit different,
frustration,
right? It's not
failure.
like a loan where one person's giving you the money. Now we've got multiple people involved too, right?
Sure.
Yeah,
Sure. Well, but it incorporated my whole point of you don't have to do it all, right? You could do
exactly.
different pieces, and I think I even mentioned I'm not good at swinging a hammer, right? So yes,
Yep.
maybe I didn't say it all the way through, but yeah, I would agree. Matter of fact, we do it pretty frequently. I mean, I don't know how many times a month Nicole does that. It's less than one for
Hmm.
brand newbies, right?
Hmm.
But multiple times a year with where you've got LLCs with multiple partners, and everything from, you can do that on everything from a small single family or duplex type transaction to she's working a transaction right now where three people are putting a syndication together on anything from they've got a little bit of a range, but anything from a 10 to a 30 unit type situation in St. Paul, right?
Awesome.
So you can do it many different ways. Now, I will say this: experience does matter to banks, especially as it gets big, right? So one thing
Hmm.
for them to take a risk on you on a, let's say, a 300,000 to 400,000 dollar mortgage, if you're asking for a $3 million mortgage, they're probably not going to approve it unless one person on that group has some experience, right?
Yeah.
So, for example, and here's how they handled this.
Hmm.
Guess who happens to be the experience in that three-person group?
You.
You're talking to them, yeah. So
Yeah.
I'm actually the fourth person in the group, and I'm getting paid for my experience. I am their consultant, and I'm going on so they get approved for the loan by
Hmm.
being their experienced syndicator because I've done 5.
That's awesome, man. That is awesome. Well, it's funny because I just did a podcast a few weeks ago about the three things that you really need to be a real estate investor. And it's not just money, right? Everybody
Mm,
thinks it's money, 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 right? But the other one is experience, right?
yeah,
And so you could come into this deal with no money out of your pocket. And I don't know what the deal looks like, but you certainly could. And you probably have
In this
because,
particular case, that's exactly what's happening. Yeah.
dude, that's awesome, right? Because you're the guy that they kind of need you. You're the
Yeah.
experience, you're the glue that is binding this thing, putting it together. And then the other thing that someone needs is hustle. So someone needs to hustle, find a deal, or find the people like Tim here who has the money and has the experience. Or even if you didn't have the money, maybe, I mean, I know you do, but maybe at the time you didn't, or you just didn't want to use your money. That's that kind of the cool thing. You've earned your way to being at the place where you don't have to, because you're like, well, guys, I've got the experience. So I'm the one that the bank is going to trust kind of the most to stamp this loan that we're good, right?
Yep.
And then everyone's bringing their little piece of what they bring to the table altogether, which is super cool.
Exactly. So, and that brings up a good point. When you're looking for your partner,
Hmm.
don't, what I see most often is three people who met in college, typically guys,
Hmm.
that get together and they all want to invest in real estate and they want to, whether they want to go big or small doesn't really matter. All three of them have the same thing: hustle and want to, right?
Yeah.
But none of them have money or experience.
Yes.
Just remember, you need to have all three elements. So if all of your partners are just like you,
Hmm.
it's probably not going to work.
Yeah, that's a great point, dude. It's a great point. Um, and if all three of you are all in a spot where you all have money right now, you have lots of options out there, guys or gals, right?
You know,
Because someone who has the experience and has the hustle can help you with that and help you move that. But yeah, if you all have the same thing, you're lacking something else, right?
yep,
So you really need, it's like the pyramid, the triangle, right, of success. You need the hustle, you need capital, sometimes, not always, or experience. And experience can make up for the capital. I've purchased many
right,
places, no money down, but that's because I had the experience and the knowledge and the hustle to try many times to get that, right?
yeah,
Which you said you've done some of that no money down too. Let's talk about that because everybody says it and it sounds sexy to say. It's a buzzword, but it actually happens, and people like you and I do those deals. Not every day, every time, right? But talk to me about your no money down deals.
yeah. So going back to first, you have to use the right tool, right?
Hmm.
If you start going and calling, you can call 1,000 banks. If you ask them for a conventional 30-year fixed loan with no money down using a partner, you're going to get 1,000 no's. But if you go to the right place, you could do one of two things. The two
Hmm.
ways we've done it, which I think are the most typical generic ways,
Hmm.
is in 2019, we purchased a single family flip in Southeast Minneapolis, college rental, 8-bedroom house.
Nice.
So it was a flip, and the seller was getting a lot of lowball offers. I heard this from my realtor. My realtor said, "You really got to look at this." And the fact of the matter is, the place cash flowed well, but most people thought it was overpriced. I'm not even sure that it was overpriced, to be perfectly blunt, but
Hmm.
they thought it was. And I have to admit, I probably wouldn't have been super interested if I had to put my own cash in, even though in hindsight, I should have done 100 of those, right? It was a great deal in
Right.
the end.
Yeah.
But going into it, I have to admit I was a little, and that's a good lesson, by the way. There's very few properties that you're going to go in and know you're paying a great price. Very often you're going to think you're paying too much, right? So, for what it's worth. But
You
anyway,
always think that.
what we did is I went to the guy and I said, "Look, this is a college rental. It's August," which was, true. School starts in, like, I think at the time, I think it was 3 weeks, maybe it was four, but school started pretty soon after. I said, "I will buy your house with a couple contingencies. The first contingency is I can immediately market it for rent, and if I cannot find a tenant before school starts, I can back out, no problem, no harm to me. I get all my money back." Right? That was one of the contingencies. The other one is I can't close on a loan quick enough. So I am going to pay you, I think it was $1,500, maybe it was $2,500 for the right. If I sign a lease to be your landlord, I basically did what do they call it? A master lease with the guy, right? So
Hmm.
I'm going to pay you $25 for the right to lease your property between now and the time of closing, right? And because he had to approve the lease, and just so everyone knows, if he signs the lease, he approves the lease, and I don't close, he has to honor that lease legally. So I
Hmm.
wanted to make sure he was compensated, and there could never be a question that happened.
Hmm.
Um,
Love it.
and then I borrowed the money from him. I borrowed the entire down payment, all 20% of the down payment from him. I forget how long. I think we'd set the interest rate at 6%. I don't remember for sure, but I paid him
Yeah.
6% interest only. And I cleared $1,800 a month on that property every single month. It was turnkey. There wasn't any
Nice.
repair needed the entire time I owned it.
Wow.
We sold it. I'll probably get the exact number wrong, but somewhere around 100,000 more than we paid. I think it was actually 115,000 more than we paid, something like that. 2 years later,
That's awesome, man. This is a screamer. I'm sorry. How did you find that? Maybe I didn't catch
it
that.
was
How
on. It was an MLS deal.
it
Yep.
was.
It was just poorly marketed. It was at the wrong time. The guy kind of it was the kind of rental that needed to already be rented and it wasn't, right? It was vacant because he'd flipped it. So he flipped a property in the wrong neighborhood, right? For the time of the year. You flip that early, a different time of the year, it works, right? So just a lot of things going against it. Anyway, that guy is still a friend of this day. Here, I mean, here's a good story. He was a flipper. We flip properties together now, and he also has remodeled multiple units and duplexes for me.
That's
So
awesome.
we created a relationship. And anyway, long story short, I had no money down,
Hmm.
and I got so the rent on this place, 8 bedroom place, I still remember was 3,800 a month.
Okay.
Okay. So I got 3,800 for first month's rent. I didn't close until after the second month's rent was paid, and we got 3,800 for a damage deposit, right?
Hmm.
Now, some of that money I had to pay back in the future, but my 2,500 and all closing costs were all covered, and I was cash flow positive when I closed on the house, meaning that
Dude.
I already had more cash. Now, again, some of that was deposit money that I eventually needed,
Yeah.
but with the rent I was getting, that was not a problem at all. So I was cash flow positive on the house before I moved in. I technically got paid to buy that house.
That is awesome, man. That is awesome. And part of that is because you knew what to look for, right?
Yeah.
You knew the questions to ask, right? You weren't afraid to ask it, right?
Well, I would have walked away if he said no. I was not in love with that house. Turns out I should have been in love with it. Like it really wasn't something
Right.
I
Yeah.
you know, I mean, I might make it sound like I'm a genius. I was really like, yeah, take it or leave it.
Yeah.
I'll do it under these terms, but no other. Which was actually the wrong attitude in the sense that, I mean, it got me a good deal, don't get me wrong,
Yeah.
but that deal was a good deal at different terms too.
Absolutely. Had you had to put down 10 grand, 15, 20 grand, it still would have been a great deal. Obviously, if you
Right.
sold it at that
Right.
price you did and cash flowed that much, right? Or had to call a friend or a partner or whatever to give you the funds, still would have been a good deal.
Yeah. So the
Yeah.
lesson there is don't just arbitrarily draw your foot in the sand. I see a lot of people do that, and that's also not the right way to profit, right?
No, no, no.
No.
Well, and again, I mean, it worked out well for you, but you created a relationship with it, right?
Mhm.
And that's the thing. I think a lot of folks, and I'm sure I hope you don't see it too often, right? I don't see it a lot, but I do see it. A lot of people are just short sighted. They don't see the relationship aspect of it. They just see it deal, 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 right? They
Yeah.
don't realize that that could turn into more deals, more opportunities, right? He's helping you, you're helping him, and you're doing things down the road because you're taking a minute to just actually connect, like be a human and be
Yeah.
kind and connect and listen and doing a deal where you both win. And a lot
Mhm.
of people think, someone's got to get totally screwed over for it to be a really good deal. Like, no, that's not at all how it works, right?
Right. Yeah.
So,
The other deal, because I am actually this is probably like the last thing I can go through now. The
yeah,
other deal was a duplex we purchased in Northeast Minneapolis, 2019 as well. No, the
yeah,
first one was 2017, sold in 2019.
okay,
Um, the next one we purchased in 2019, and I borrowed 100% of the money for the
hmm,
down payment, plus what I estimated the closing cost to be from a client of mine. Okay.
mm,
This client, obviously trusts me, wants to be passive. So I borrowed the money from her. At the time, if I remember correctly, I did pay her 10% interest and 3 points. Okay.
okay,
But the points were backloaded, meaning that like I borrowed, let's say 70,000 from her, but I
hmm,
paid 72,100. The 3 points on the end, right?
okay,
That's not the exact numbers because if I remember correctly, it was like I borrowed 74, 76, but it was something in that range, right?
hmm,
Anyway, the entire down payment borrowed from her, plus what I estimated the closing cost to be. Turns out I was incorrect on the closing costs. I missed it by $904. So I wrote a check for $904 to get into the house, but I did get security deposits from it. So if you wash those out, I think I ended up with like $300 positive or something like that from the
that's
security
awesome.
deposits.
Yeah,
But either way, even if I had to write a check for $1,000, I still got into it for that. And again, I used the right loan product though. I used a loan product where you can borrow the money for a down payment. I didn't have to lie, cheat, or steal to do it.
Hmm. Well, and this is such a great reminder, dude. And I know we got to wrap up here in a few, but such a great reminder that when you're talking to, say, a mortgage professional about getting an investment property loan and they don't have any investment properties, but that's who you're asking the questions to, it's a little
Yeah.
scary, right? A little scary. Or you're working with a realtor who's telling you all about the after repair value of this house or rehab or comps and this and that, and they don't have any investment properties. It's a little scary. So you truly want to be working with people who are doing, what they preach and have experience and have the knowledge. And I think that's so important, right? And
Hmm.
and good or bad depends what you want to do, right? Depends what you want to do. But find the person that's doing it and can be a really good guide and resource. Or if they're not, they can connect you with somebody, hopefully.
Yeah.
So speaking of Tim, where can folks connect with you? How should we reach out to you if we need to get hold of you? Some questions, some business, pre-approval with a goofy scenario like that, or a regular one. We don't have to just give you goofy stuff.
Yeah. So hopefully in your show notes you can have the spelling of my name.
Sure can, sure can. Well, it's SWIERCZEK. But yeah, we'll put in the notes too.
Yeah.
Yeah.
Yeah. So my email is tim@timswierczek.com, right? So we'll
Yeah.
have that in the show notes. But my
Yes.
phone number is actually pretty easy, so I'll just give that. My phone number is 651-772-9000.
That
Okay.
is easy.
Um,
That's like a marketing
so
number right there.
since it's a podcast, we don't have to repeat it because they can just pause it and replay, right? But
Sure.
I suppose I could give the email too. It's Tim
Mhm.
at TIMSWIERCZEK.com. That's
Beautiful.
it.
Beautiful, beautiful, beautiful. And while you guys are jotting down notes, by the way, um, take down this number if you're looking for new deals before the end of the year, or you want to kick off 2023 with your next investment property. Because if you're not on my hot deals alert, you are missing out on a lot of opportunities to get 12, 15, 20 plus cash on cash returns that people like Tim and I and our group and our community are doing and getting on a monthly, if not weekly basis. Okay. So hit me up, guys. Text me at 612 662 6629. Again, 612 662 6629. And text the word slow flip. SLOWFLIP. Slow flip if you're looking to get another investment opportunity before the end of the year or to get you rolling with 2023. Because we're at that place in time, right, where man, we have like what 45 days, less than 45 days of 2022. And I don't know about you, but Tim, I'm going through my goals and I'm going through what I wanted to accomplish this year, looking at what I have done, what I got to work on a little bit still, right? Do that final push, things that again, what did I want in family and health and real estate and business and all of it. And then we're getting to the point like, okay, it's a brand new year. 2023 is,
Right.
is, is coming up, right? And so, what do we want to be talking about, and what does this feel like a year from now, right? Because I think it's a powerful time of year, and it should just be New Year's Eve, right? I think it's silly, especially with you know, the resolutions and whatnot. That's I think kind of a joke, but it is a good time to reflect and stop and think. And so, guys, if you need to talk to somebody about can I get financing and funding, Tim can hook you up. Okay. I make a joke a lot, and we'll wrap up. But you shouldn't be looking at properties unless you know you have the money to get it. Okay. Now you could go do something creatively, and I should say I don't want to stop you or pause you on that because Tim just told you two ways he's gotten deals, and I've gotten deals before, no money down. Okay, but you still want to know, like, I got my wallet in the car. You know what I mean? I've got options if I need it. But it's amazing. I've talked with, I think, 3 people this month where they said, well, I don't want to go that far yet. I'm just going to look at stuff. And when I see something, then we'll do that. Okay, guys, that's like going to the grocery store, having $300 of groceries, going to the checkout, and they go beep, 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 and they're getting everything down the little aisle, and they say, okay, you owe us $300. You're like, oh, well, I don't have any money, and you bought everything. It's too late, right? You don't have your money on you. So you need to have your funding set up before you need to pounce on something. And good deals go fast, and they might go in a matter of, days. So you got to be ready to go.
Yeah.
And there's nothing, you're not getting your blood drawn. You're not doing a urine sample. I think those days are over, hopefully, right? But I mean, it's not too painful of a process, but you want to make sure you're set up, you know what you can do. And if you can't do it, maybe you rope in some partners, right? I've got a couple clients right now. We're looking at some short-term rentals, in some parts out west, and they know what they can do on their own. But they know if they go above that dollar amount, they need to rope in some partners. Well, that's all good, because guess what? I know more than a few people that want to own properties, vacation rentals in that area. So you just have to have your options and know what you're going to do. So and
Right.
work with someone, like you, Tim, who obviously you have lots of options. That's your superpower, is being creative and a problem solver and finding ways to get things done, man. So
Yeah.
yeah, I appreciate it. Yeah, I know there's a lot more we could go. Probably part 2 and 3 of this.
And I think so. So here's, I think we need to do a teaser, because I think that this isn't maybe the most, I don't think this is the critical part, but I think there's a very there's a couple misunderstandings of mortgages that we
Mhm,
should cover next.
mhm,
And the teaser on one of them is this. I know a way that most investors are analyzing deals to the point where they're passing up on deals that they should be taking. And when they listen to our next episode, they're
mhm.
going to buy a deal more confidently, because they're going to know they've been missing out on profits that were there. They're actually already there, but
Mhm.
they're not seeing those profits, so they're turning away deals that are actually profitable that they think are not. And so
Wow.
that is my mortgage myth, or my mortgage misunderstanding, that I'm gonna tease.
Yeah.
Next episode that you and I do, we'll cover that.
Yeah, man. I love that. No, absolutely. And I want to listen to it now, and I'm going to be a part of it. But yeah, absolutely. There's
You'll be
a lot of
disappointed because it's right there in front of your face and you have no idea. Literally, I'm not
what?
kidding. Yeah, no, I'm serious. I see it all the time,
Yeah.
and it's another one of those things that your grandparents did the math on a napkin. Your parents had a calculator, and if you just had a computer, you'd be like, "Holy shit, we were wrong the whole time."
Wow. You don't know what you don't know, right?
Yep, yep.
Dude. Okay. Done. Yeah, I love it. Part 2. Part 2
All
coming
right,
up.
man.
Well, I know you're going to be going on vacation here soon. And where are you going? Tell the audience where you're off to.
We're off to Keystone, Colorado.
Woo!
Last year we spent 29 days, ski days in the mountains, and this year we're going back for Thanksgiving. We're gonna be night skiing. Thanksgiving night, I'll be skiing like under the lights in Keystone.
Oh,
My whole family loves it. We get to spend time together, and it's
that's
another
awesome.
reason to invest in real estate, man. We're actually staying in a condo that's on the market that I've been eyeing for months. I'm bringing a Matterport. If you know what the Matterport camera is, we own
Yeah.
one.
Heck yeah.
We're gonna Matterport it. We're gonna measure it, and I don't. We're gonna make an offer on it. Um,
Nice.
yeah,
Love it, dude. Well, and guys, you know me, right? I'm all about lifestyle design, and this is about the Creative Cash Flow Show. It's about lifestyle freedom and financial freedom. It's not just both. And so, Tim would love to go skiing in the Rockies anyways, but it's going to be a little sweeter when he's looking at a house that might be his next vacation rental. And even if it's not, it's a write-off, and it's a great experience, and he's taking the fam. And I'm sure you'll be doing a little bit of work nonetheless, but you're working from the Rockies. You're working from probably the hot tub with a cocktail in your hand, or a hot cocoa if you prefer, right?
yeah,
And and it's both. It's not like here's my work, here's my life. It's the same, and it's all
yeah,
because you love what you do, which is super cool, right? As do I. So that's awesome, man. Well, have a
yeah,
great
dude.
time. We'll be up at our vacation rental skiing as well. A little smaller mountains, but be a good time. So thank you. And we will have you on the show again soon, man. That was awesome.
I love it. Thanks, dude.